right, welcome back. This is the Something Venture podcast. I am Kent Lindstrom. I am your host. My guest today is Rick Marini. How are you doing?
I am doing great. Good to be here. Thank you for having me.
Hey, thank you so much for doing this. This is going to be great. You have, not really a technical term, but a very cool career, and I'll cover it briefly. I'm sure I'm missing a lot of it, but you went to Harvard Business School, as a lot of people in Silicon Valley are wont to do. You chose the path of starting a company. You built with a couple of other people, Stan Chudnovsky, James Courier, the early social network Tickle, sold that to Monster, then went on to build another network on top of a network, which was Branch Out, which was built on top of the Facebook network. Also sold this company, and I can't underscore enough how hard it is to sell a company, and you've done this twice. Did a few other things, and now have founded Protocol Ventures, which is if not the largest, certainly the most prominent fund of funds focused on cryptocurrency. And on top of that, while you were doing all these other things, you made about 50 angel investments. And as a result of those angel investments, have just been named to the Forbes top 50 angel investors. So how you doing? Are you tired?
I mean,
this is a lot of work.
You know what? All the work, I love the work. The only reason I'm tired is I've got 2 young kids.
That'll do it.
But on the career side, no, I've loved my adventure, my journey in Silicon Valley for the past 20 years.
There is something about Silicon Valley that the community of Silicon Valley is what creates. It seems to me that other businesses, you're just trying to kill other guys, basically. You know, New York, hey, you want the yen to go up, he wants the yen to go down, like, screw you. Like, in Silicon Valley, though, there really does seem to be a concept of like, hey, I made all this money, I'm going to pass it on to somebody else now to make more money. But it does seem that that's resulted in there being this ecosystem here that has sort of become dominant. That is, you moved here from Boston, right? And you used to be, wasn't there a time when it was like San Francisco and Boston were the tech hubs?
Yeah, that was the case probably 20 years ago, maybe even 30 years ago, when Boston was really, really strong in hardware and software companies. And, I grew up an hour north of Boston. As you said, went to school in Boston. When I came out to San Francisco back in 2000, so we're talking about almost 20 years ago, one of the things that I was most struck by was how collaborative the culture was. And I didn't really get that. It took me probably kind of 6 months to kind of groove into that. I thought actually people here were kind of lazy because I was so used to the fast pace of Boston and New York. And I come out here and, people get in later and they leave later. And what I realized is that people are trying to create big companies, big ideas, and big ideas take time to bake, right? So that was one thing that struck me. And number 2, culturally, it was so different where people here, they would never ask you to sign an NDA. That's actually a red flag, right? So out here, it's more about, hey, I've got an idea. I want to share my idea, get your feedback. If I'm the best person that can execute on that idea, I'm going to win.
Yep.
So I want to share the idea, get feedback. And if I realize, hey, I'm in the best position to this and everyone's giving me this great feedback, I should go for it. You're not going to find that in Boston or New York as much, where it's just more transactional.
Well, and I think then over time you got the issue too, where people, if they started to really, if they really had ambitions to Silicon Valley, they kind of moved here, right? Like Mark Zuckerberg was in Boston. He could have stayed in Boston. He somehow made the decision looking out across the world that, hey, I want to be in Silicon Valley and I want to be where Mark Andreessen is, and here he is and here we are.
Yeah, I think you can create great companies anywhere in the world, but I do believe Silicon Valley has unique advantages. One is going to be that ecosystem of kind of that collaborative culture. Number 2 is capital, right? I mean, you've got Sand Hill Road and now San Francisco. A lot of the VCs have built at least a satellite office right around the corner from us in South Park and San Francisco. So you've got a combination of both the capital and the collaborative nature of Silicon Valley, and that's really powerful.
Yeah. I mean, it ended up being a good move, but coming out of Harvard Business School and starting a company, that wasn't the typical path. What weren't most people going to? Wall Street consulting, dad's business. I think were the 3 things when I was getting out of school, basically. And Silicon Valley was not a super obvious thing to do.
It was never my plan going in to HBS. I had come from a background of kind of investment banking type of work, call it corp dev, M&A work for 3.5 years at a company called Fisher Scientific, and then was fortunate to get into Harvard Business School and met a guy named James Courier who was in my class. And James had come from venture and had a great background as an entrepreneur. And James and I started Tickle at HBS, and I had always intended to go back to Fisher. I also had offers from top investment banks and consulting firms. I was really fortunate to get offers from those. And really, it was about timing, right? So this is 1998, 99 when we graduated, and the internet was red hot. And it felt like if there was ever a time to make a career change and go into something that's red hot, the consulting and investment banking jobs, they'd always be there. Yeah. But that was a time to go for it. And James and I both, walked away from what could have been lucrative offers to make zero for the first year.
Yep.
The first year we made zero, and followed our dreams and followed our passion and started a company.
And did you think what would happen? Did you have any? You probably, of course not. Did you have any idea what would happen with social networks? Like that, the most valuable company. Well, one of them would be worth $30 billion. That's LinkedIn. The most valuable company in the world, or the fourth, is Facebook now. Like, from there,
James and I, even early days, I'll say, saw the opportunity or the power of being able to use technology to connect people. And that was what we had done with Tickle, is that we were using personality tests so people could take a test and share results and see how they connected with other people and how they were the same or different. It actually was sparked by taking the Myers-Briggs test at HBS, and everyone started to open up and talk about their different, the ENTJ or INTF. And it was really cool that, we saw that early. So we did see the power of what the internet could do in terms of connecting people around the world. Right. At that point, Facebook wasn't even an idea. Right. I mean, this is early days, this is 1999. But we did see how important that could be for the future of the internet and using technology.
Yeah, I want to ask you about your angel investing a little bit, because you're, among other things, you invested in Snapchat, which is a pretty prescient bet. But I have a story for you. I was as I was researching this, reading about Tickle, I came across an old article about a guy named Michael Birch. Michael Birch, famously, he founded the third or fourth most successful social network in terms of economic outcome, a company called Bebo that got acquired for almost $1 billion by AOL. And this article is about when he was launching Bebo. Now, keep in mind, social networks now have become companies worth hundreds of billions of dollars. And he was interviewed, and Michael Birch was saying, yeah, it's this cool social network, and we let people rate each other, and if 2 people rate each other more than 8, we'll send them each an email knowing that they find each other attractive. And he's like, this isn't the biggest thing in the world, but that's what we're doing. And I find that kind of interesting as you look at some of these companies, what would be angel investments for you now, where what they're doing early doesn't seem that. I mean, if you were at the time an investor, you're like, oh, Michael Birch is emailing people who rate each other an 8. You wouldn't go, hey, that's $1 billion thing. Or if you look at Uber early on and you're like, it's, the livery services have a gypsy cab, option now. Like, how does that inform your angel investment? Do you have these companies you invest in that just turn into something that you're like, wow, that was not what I thought?
Well, it's funny you bring up those two, because Michael, as you did the research on Tickle, Michael worked for us. Michael was an engineer at Tickle, and what happened there is when we sold to Monster, Monster had an earnout just for the senior team, which was me, James, and Stan. So other folks didn't have the earnout. So Michael said, well, I made some money here on the acquisition, so I'm going to move on. And he started Bebo. And then with Travis and Garrett over at Uber, they've been my friends for over a decade. And I remember I was at a dinner at Naval Ravikant's house, and Travis was there, and he was pitching all of us Uber, which was like black cab or black car back then. And we're all like, you just want to be a rock star and drive around in a limo. And I'm from New Hampshire. We drive pickup trucks. So I was like, this is, you guys just, want to be rock stars. And I didn't do the investment. And looking back, that was my worst miss. I mean, every investor has the worst miss. That was mine.
Uber is for a lot of people. Like Uber, there's a lot of very smart investors who knew Travis, who had the Uber opportunity and didn't. It seems like one of the bigger ones. Like a lot of people didn't invest in Facebook, but they didn't know Mark Zuckerberg. They weren't going to invest in Facebook. Like Uber's one where a lot of people are like, oh yeah, I got that email and I passed.
Yeah. And the lesson for me, and I think for anyone listening, is VCs or even angel investors like me, we always want to back team first, idea second. because the team has to be able to execute and often pivot, right? What you start out with often is not where you end up, and you could see that for bourbon became Instagram, or Odeo became Twitter. I mean, there's countless stories of a company starting as one thing and ending up successfully as something else. So you always want to back the team first. So as I look back on that, I was sitting there with Travis pitching us, and we're kind of giving him grief about it. And instead, I should have just said, what, I'm going to back my friend because I believe in him and that he's going to be able to execute. And he did execute and created a company that we all use every day.
I think there was one trick to Uber, which was, didn't they have a phase where they weren't running it, but they had an interim? There was some management thing that was a little odd about Uber for a while. That, to be fair to an investor, didn't look normal. Like they brought in some third party to run it, and they weren't really even doing it full time.
Well, it's funny, and I think I'm right on this, where Travis was originally going to be the chairman and Garrett was going to run it. And then they brought a guy named Ryan Graves in.
Right.
And then Ryan ended up doing a lot of the heavy lifting. And then Garrett and Travis kind of switched, where Garrett became, I believe, chairman, and then Travis CEO, and Ryan was, I think, the GM. Maybe he was elevated to COO or something like that, later on. But Ryan and Ryan did a lot of the heavy lifting. Yeah. The original vision was definitely Travis and Garrett, and they get a lot of credit for that, and have done obviously well financially because of it. But yeah, I mean, it's always a team effort. I mean, to create any kind of company at scale.
Man, what a great example of so one of the things that happens in Silicon Valley that you've mentioned is that the leader in a category takes 90% of the value or 80% of the value or whatever, which with the early social networks wasn't the theory. I remember Reid Hoffman saying, well, there's going to be a European social network that's going to be Bebo, an Asian one, and now it turns out to be one, but with the car services in the United States, certainly Uber is an $80 billion company. Then Lyft is 15 or 20. Sidecar's gone, the third one. It's like a set of steak knives, and third guy gets fired basically.
Yeah, the way that I look at that as an angel investor is that typically as new companies are coming into a market trying to disrupt the incumbent, you're going to see 85 to 90% of the value accrue to that disruptor, and then 5 to 10% to the number two, and then the last 5% or so is shared by the long tail. So if you don't find the number one company, you better be in a really big TAM, a big total addressable market. So you just brought up Uber and Lyft. That is one of the few examples where being in number two is still a phenomenal investment. Like you said, I think the last round for Lyft was around 15 billion. But at the end of the day, just from a financial return, you would have rather been in Uber because they're worth 80 billion-ish. Right. But most markets aren't big enough where the financial returns are large enough when you're in the number two. So not only as an angel do you have to pick the right strategy and the right timing, and obviously the right sector. Backing the right team is so important, because if you back number two, you may just get your money back. If you back number three, it's probably a negative outcome.
Right. And is this why? I mean, you must be good at this. I mean, is this why you're on the Forbes list all of a sudden? It's quite an achievement.
Well, thank you.
There's 50 people in the world. How many investors are in the world? How much money are there? 50 people in the world make the list. That's
Yeah.
That's
So what it is for me is that, I was a three-time entrepreneur, started 3 companies, raised $58 million from top tier VCs, and had 3 exits. And what I tried to do is then take that experience and apply that into my investing and helping these companies. And that's really been important for me, not just to be able to vet them and hopefully invest in the winners and spend my time with the winners, but actually apply my experience to those. And I enjoy that. So to be, and by the way, I've done over 50 investments over a 10-year period. Right. So this isn't something I just started doing.
Right.
So, what I would say to aspiring angels is that, first off, to be clear, angel investing is really hard. And it's not hard like you're digging ditches. I mean, it's hard to be good at it.
Yeah.
And for a lot of reasons. But, one is that you are typically the first money in, which also means you have the longest path to liquidity, typically. And it's hard because you are basically making a decision when you've got, 2 or 3 co-founders in front of you with an idea on a whiteboard. You don't have any traction. You can't apply any kind of, DCF analysis or something that a late stage investor could do. There's no traction. It's an idea. And ideas are easy and execution is hard. So you're trying to, to find those teams that you believe have a good idea and can execute. Yeah. And that's really difficult. You're going to take zeros along the way. Now, Naval Ravikant, who is one of the top angels in the world. I mean, feel fortunate to be in the top 50. I think Naval, I'm not sure the rankings, but he would have to be, top 5. He had said to me 10 years ago when I started angel investing, until you do about 30 of them, you're not going to be good. You're not going to know what you're doing. Right. Well, hey, if you're going to do 30 of them, that means you're probably spending $500,000 to $1 million to self-educate yourself before you know if you're good. Wow, that's a lot of money. That's a lot more than college cost. Right. So you've got to have kind of a stomach to be able to do that before you know if you're good. And a lot of these are going to take years before you know you're good anyway. And by the way, many of these will be zeros because, it's the earliest days. I mean, even early stage VCs take zeros. Right. So you've got to have that risk tolerance too.
And you were in Snapchat too, which was a pretty phenomenal early investment. I'm not sure what happened with Snapchat later, how they're doing now. They're public, so something worked out with Snapchat.
Snapchat was a great one. I was able to sell after the IPO, so that worked out well. Snapchat was the one, or right now I feel like is a one company that can give Facebook a run. Facebook just keeps buying everything that does well, whether it's Instagram or WhatsApp or other companies. Facebook has been a very smart acquirer. They pay up, but they're protecting their moat. Yeah. So they they're smart, and Snapchat and any social networking company. Snapchat is the one that really got escape velocity, but any of these companies have a really hard time competing with the 2,000-pound gorilla. Forget the 800-pound gorilla. Yeah. I mean, Facebook is just a beast when it comes to social networking.
Well, I think they've gotten really good at abstracting the value. I mean, I think when Snapchat came out, a lot of people, they didn't take it seriously because they're like, oh, it's good for like porn or inappropriate material because the photos disappear. And it turns out that no, that wasn't the value proposition. Photos disappearing mean that you can take so many photos, you don't want to save every photo forever. So people kind of missed that was a value proposition. But I think Facebook just said, okay, the complexity of Snapchat is not that fun for most people, but these little quick stories is a good idea. We'll put it on our platform of 800 million people on Instagram, and executed it pretty well. And, Snapchat replied with glasses or something like that. I mean, it's tough when you've got that much distribution. If they don't execute poorly, it's going to be tough to keep up with someone like Facebook.
Yeah, it's tough because Facebook has very, very smart people there. Many of our friends work there in high-level roles, and they're very good. So Facebook has the ability to be innovative with these smart people, but also just look at the whole landscape and what's working. Right. And if they see something working at Snapchat or another company, they can be a fast follower and incorporate that into their platform, a platform with well over 1 billion DAU across, the Facebook platform, across WhatsApp, across Messenger. I mean, it's, like I said, it's a beast that they can either innovate or fast follow others with the successes.
It is crazy. So with all this success, you make another career move that's, I think, pretty incredible, which is cryptocurrency comes along, the blockchain, and you form and now are the, I assume, managing partner of Protocol Ventures, which is the largest fund of funds, or certainly the most prominent that I'm aware of, fund of funds focused on the cryptocurrency market. So congratulations on that.
Thank you. Yeah, I love crypto. I've been an investor for the past 4 years and launched Protocol Ventures about a year ago. It's a really exciting space.
So I have a question about this. I feel like there's a lot of people who are saying today that they've been in cryptocurrency for 4, 5, 6 years, something like that. And I think that they legitimately have. Like, clearly, when you look at their record, they have been investing in cryptocurrency. And yet I feel like over the last 3 or 4 years, it hasn't been much of a topic in Silicon Valley, in the same way that drones or artificial intelligence or sharing economy things have. And all of a sudden, there's this whole group of people who are like, yeah, we were all buying, David Marcus of PayPal. I was like, I was telling everyone to buy Bitcoin like 4 years ago. Like, what? Is this something where everyone was just in 10 different things, the one that worked, they're now saying they were into? Or was there some reason that people kept on the down low? Or am I just not subscribing to the right podcast in Silicon Valley? What the heck's going on?
So you know what I think happened is that the original white paper for Bitcoin came out in 2008, and Bitcoin really started being able to trade, to buy and sell, say 2009. From 2009 to 2016, Bitcoin represented basically 90% of the market value. So there really wasn't a cryptocurrency market. And blockchain technology was still very early. It was basically Bitcoin. So it wasn't that, it was basically one asset that you were buying. It wasn't a whole asset class really until 2017. And what happened in 2017 that I think was a game changer was the introduction of the ERC20 token. Don't want to be too geeky here, but that allowed on the Ethereum platform for a couple things. One, smart contracts, and smart contracts then allowed for ICOs. And then all of a sudden you had this boom in ICOs, right. And you went from about 100 cryptocurrencies to now 1,700 in 2 years, right? So it wasn't that nothing was going on back then. It was really all about Bitcoin and infrastructure being built, especially with Ethereum. And then once we had that game changer and all of a sudden you had, the floodgates open and you could do all these ICOs, that to me is when everyone started to say, yeah, I've been buying Bitcoin for a long time, but there wasn't a whole lot to buy until now. And now we've got a real market. And now people are talking about it more.
Right. So so there's people who made hundreds of millions of dollars on Bitcoin. Like, where are these people? Like, I know they're there. Are they just kind of keeping quiet about it? Or because you just do the math and you're like, well, if people were buying like 100,000 Bitcoin as a joke when it was like a penny, well, it's not really much of a joke. And, at $8,000 a coin, right?
For sure. Yeah. So, you've got two camps. You've got a lot of what are called Bitcoin whales. These are the people that have 100 million or more of Bitcoin. They most likely bought when Bitcoin was very low in price, and that's how it, through that appreciation. Like you said, Bitcoin is now somewhere around, as we talked today, around 7,500 to 8,000 in that range per Bitcoin. And they were buying it probably in the single digits or, very, very low price. So that appreciation has made them worth a lot. A lot of those Bitcoin whales, they're just holding. So they are not out there actively telling the world that they've got all this money, whether that's for tax reasons, they don't want to do that, or also for safety reasons, right?
Safety,
I mean,
sure.
That's actually a big deal now, especially as crypto can be hacked if you don't know what you're doing. So, for safety reasons and maybe some of them for tax, I don't know, maybe want to be quiet. There's some other folks out there that are very vocal about crypto that, like Brock Pierce, he's kind of a big figure, or Barry Silbert, big figure in crypto that a lot of people look to as, early guys, smart guys, made a lot of money in crypto.
Yeah. I just read it's such a fascinating story. I just read the book. I think it's called Digital Gold. And it's about the history of Bitcoin. And it's just it's a good story. I mean, you've got like this Satoshi who nobody knows who this guy is, and it's super mysterious. And you've got the Winklevoss brothers managed to get involved. You've got Silk Road. It's just good drama, if nothing else.
Yeah, there's been a lot of interesting characters along the way, almost like it's an episode of Billions or something. It's lots of colorful characters, and lots of ups and downs too. I mean, Silk Road and the dark web and everything. I mean, that's where a lot of the early use case of digital currency, specifically Bitcoin, at this point now, that represents, from last I saw a study, less than 1% of the market. So you don't hear that as much, like, oh, Bitcoin is just used for like terrorists and drug dealers. I feel like up until last year, you heard that a lot, and that's just not the case anymore. I mean, my 72-year-old PhD in chemistry father-in-law buys Bitcoin. He's far from a terrorist or a drug dealer, right? I mean, it's become more mainstream.
Well, in this story, everyone's story gets cleaned up in retrospect, but the Winklevoss brothers say that they go in really big when, I guess, Silk Road got shut down, which is where the illegal activity was happening. And the theory would be, well, if the illegal activity thing got shut down and Bitcoin's for illegal activity, then therefore the price would crash and collapse because it's worthless. It didn't collapse, went down 20%. And that's when they said, look, absent there being a primary illegal use case, people still value Bitcoin at 120 at the time, for God's sake, but 120 at the time. And that's when they went in with their, hundreds of millions. And I don't know, those guys just from jumping from one stone to another.
No, they've done very well. Anyone who made an early bet on Bitcoin for whatever reason, if they held, have done well. And Bitcoin, to me, out of the 1,700 cryptocurrencies, is the one that's a very, very clear use case, right?
Yes.
And see, so people often say Bitcoin is digital gold, right? It's a store of value. And if you think about the use cases for Bitcoin, let's think about hyperinflation like in Venezuela, or you've got corrupt governments in Africa. They don't believe their currency has any real value. So if you are sitting on a currency that you believe is going to devalue in a significant way, you should move that into another asset class. You could buy gold, or a lot of people, for depending on where you live, it may be easier just to buy Bitcoin. And Bitcoin is transferable, right? I mean, if you want to go buy gold blocks, I mean, good luck trying to store those.
Right.
You could buy $1 billion of Bitcoin versus buying $1 billion of gold blocks, right? So for a lot of people, the store of value, especially outside the U.S., actually is a big deal. And it's also been interesting that Bitcoin has been kind of maybe a flight to safety for some in turbulent times. Even what's going on right now with tariffs and things that Trump versus I guess the world. I was going to say China,
right.
But the world on tariffs. I mean, you saw some increase in price of Bitcoin around that time, around all the tariff talk, because I think people are like, yeah, you know what, I kind of want to hedge that, and I think Bitcoin should be part of that portfolio of hedging.
I mean, you hear it all the time from people who say, hey, you guys in the U.S. kind of get it, but I'm from Venezuela. Like, if you lived in Venezuela where you have to run to the store when you get your paycheck because of the prices, you'd understand it a lot more. Like the value of it a lot more.
Yeah, it's funny, people are always asking me in the U.S. for, kind of use cases, and they don't fully understand Bitcoin. And that's usually what I say is, like, think about if you live in Venezuela. Think about if you live in Africa. It's very different than living here, where we have a legitimate banking system and legitimate government and all that, all of that in place. The use case for Bitcoin becomes much, much more interesting. And actually, even for just blockchain technology, let's say smart contracts on Ethereum.
Right.
If you live in a country where the government is corrupt and they can come and take your house at any time and say, oh, you don't have any proof, of your title, and you say, wait, I have my title on the blockchain. There are literally millions of computers out there that can show you the block where my title lives, that I've got backup on the blockchain, and that's immutable. That can never be changed, right? The blockchain is an append-only database, right? You can't go backwards. So that gives people in these third world countries that don't have the infrastructure we have a huge advantage of where they are today. So because we're in the U.S. and we're very advanced in many ways, we don't always see the use case for Bitcoin. But it's interesting. A friend of mine just got back from Asia who's a crypto investor. And he said, Rick, I think 80% of the activity is actually happening in Asia, 15% in the US, and like 5% other, mainly probably Europe. And he said it's all Asia. It's all China, Korea, Japan, and other countries as well. They are so far ahead of us right now in blockchain.
All right, we'll pause there. That's part one of my two-part conversation with Rick Marini. Rick is the founder and managing partner of Protocol Ventures, the crypto fund of funds. We had a great conversation. You guys have asked me to keep these things relatively short so they fit into your very busy, very important lives, which I understand. You've also told me you appreciate the in-depth nature of the conversations. Taking those two things into account, I have figured out, hey, I can break them into two parts. So that was part one. Thank you so much for listening. This has been the Something Venture podcast. See you next time.